Hello and welcome. You're watching Ask Profit. I'm Anushi Vakharia and with me is Soumit Sarkar. Now, this is a show where you get all your stock-related queries answered. But before we do that, let's take a quick look across how the markets are faring right now. So let's go across to where the benchmark indices are. Now, in terms of where the Nifty 50 is, it's holding strength as compared to the broader markets. They're currently up around 0.27% of levels. In fact, let's look at Nifty Bank also to see how that is faring in trade today. Nifty Bank, we are seeing about, okay, it's currently flat in red. That is what we are looking for Nifty Bank. But coming back to the benchmark indices, now if you are seeing what is happening, let's pull out the point contribution table to get a sense on what are the key laggards and the stocks which are gaining in trade today. So in terms of where the point contribution table is, Infosys, Bharti, Airtel and ICICI Bank, we are seeing right at the top. However, L&T Trent and IndusInd Bank is in pressure. Now, IndusInd Bank, there have been concerns on the reappointment of the CEO for the extension of 1 year as compared to the expectations of 3 years. So there is uncertainties building around that front. So IndusInd Bank in pressure on that front. But also let's get a sense on how the overall market breadth is trading like in terms of where the advanced decline ratio is for the overall market. So currently for Nifty, we are seeing about 30 advances as compared to 19 declines. So while for the benchmark, it is in favor of green. Overall, if you take the broader markets, that's where we are seeing pressure, about 1400 declines as compared to 800 or 900 sort of advances that we are seeing in trade today. Now, this is in contrast to what has been happening prior to a couple of sessions where we are seeing broader markets outperforming the benchmark indices. So there is some pressure that we are looking here. Nifty mid-cap 150 about flat today. In the last half an hour or so, we've seen a steeper fall over here and currently they're about at the levels of 18,282 in terms of where the small cap 250 index is. So let's look at that, how that is faring. Okay, we are looking at cuts of around 0.47%. But, Soumit, let's address some of the stock-specific action that we should be watching out for. Which are some of the stocks which are in focus today?
This has not much of an action when it comes to the index, but stock-specific, a lot of action that we are seeing specifically when it comes to power stocks. Names like Adani Energy, Power Grid are the top F&O gainers in trade, have gained more than 3% in trade. Apart from that is the real estate stocks that have also been buzzing in trade like Phoenix Mill, that's up around 3.5%. Torrent Power, again a power stock, followed by JSW Energy. Then there are metal stocks that have been buzzing, JSW Steel, JSPL, both are up in trade. Industars has gained close to 2% in trade. Then there is Tata Power, again up 2%, in HUL up 1.5%. Then there is Bajaj Finance, which has gained. FMCG stocks have been buzzing in trade. On the loser side, it's Titagar Rail, which has dropped the most, down around 4% in trade, followed by Kalyan Jewellers, down again 3%. IndusInd Bank down 2.5% on the back of lower than expected extension of the CEO. Then there is Trent, which is down 2.5%, and this is post Kotak has downgraded, or not downgraded, has cut the target price on the stock to around 5,100. Then there is Paytm, which is down again 2% in trade ahead of the expected block deal by the market. CG Power down 2%, Max Healthcare, IEX down anywhere between 1.5 to 2% in trade. So in short, it's the power and real estate stocks that have been buzzing higher in trade today.
Right. So now this is the overall sense of the markets that we are seeing in terms of the broader market, the benchmark indices and which stocks are in focus. But with that, let's introduce our guest for today. Joining us today here on Ask Profit are Brajesh, Head Technical and Derivatives Retail Research of ITBI Cap, along with Saurabh Jain, the Equity Head Research of SMC Global. Hi, thank you so much for joining us on Ask Profit again. I'll start off with you, Saurabh. I want to understand your sense on the markets for this week. What is the expectations like?
Overall, if you say in the last 4 or 5 months, we have seen consistent selling by the foreign institutional investors. I mean, the growth is dipping down the earnings season so far. If you look at the select industry, select pockets, that was not commensurating with the valuations at which we were trading. Now the valuations have subsided, but I think some room is still left, especially in the mid cap and small cap space. I think maybe the bounce can be seen as a relief rally. What we feel, and we think going with the Trump, talking about the tariffs and all, I think in the next 30 to 60 days, things will get pretty clear. Till now, what we are advising our clients to be selective in pockets like FMCG or maybe utilities, buy selectively, especially in the large cap category for the long term.
Okay, so that's as far as the view is for, what the current markets are doing. But yeah, Samit, you wanted to add something more on that, yeah.
Well, yes, the first query that has coming in, let's start with that. It's coming in from Himanshu. He's from Udaipur and it's on Gensol Engineering. Now, that stock has been in focus. A lot of news flow that have come in over the weekend. The fact that promoter has sold close to 9 lakh shares in the open market, which is close to 2.37% of the equity, valued at close to 30 odd crore rupees. But this fund, whatever the promoter is getting by selling this shares, is something that the company will, the promoter will be using to infuse back into the company. They are looking to do a fundraise, which will be crucial for Gensol Engineering. So keep an eye out for that. Now, how will the company, how will the promoter infuse these funds back into the company? Back in June 2024, they had issued close to 61.84 lakh warrants to promoters and multiple investors. Now, of this 61.84 lakh, around 15.3 lakh warrants were subscribed by the promoters, and as per the subscription terms of the warrants, around 25% is the amount that has been paid upfront, while the remaining 75%, the company had an option to call for this amount by around December 2025. So most likely the company might look to prepone this call for this 75% of the balance amount, and that's how the promoters and other investors could infuse funds back into the company. So close to 404 crore rupees is something that is pending amount that can be called for this warrants, and of this 404 crore, nearly 1/4, that is around 100 crore, is something that the promoter will be putting in, while the remaining 304 crore will be infused by the remaining 107 investors, and this will be done at a price of around 871 rupees, which is nearly 2.7 times its current market price. And the company will hold the board meet on March 13 to decide on this fundraise. So this is something that we need to watch out for. What is the outcome that comes ahead from this board meet, and will the 400 crore be sufficient for the company? At least at this point, it seems like, given the fact that the company's debt stands at close to 1,150 crore rupees, and this 400 crore it defies nearly 35% of the total debt, which should be sufficient for the company to repay its near-term debts and to fund its capital expenditure. But let's get in. Firstly, Saurabh Jain, who's the equity head research with SMC Global. Sir, any view when it comes to Gensol Engineering? Is it a good opportunity to buy Gensol Engineering post the 57% drop that we have seen in the last 1 month? Is the main query coming in from Himanshu.
I don't think so. I mean, the numbers which you have talked about, like if the capital infusion will be happening at a price of 800, I don't think so. If you look at the financials and the credentials of the company, I think it is a bit clumsy. And now with the stock tanking, I think future doesn't look. I mean, something is likely to happen, which maybe street doesn't know, and which we come to know later on. So I think one should be on the sidelines if someone is considering Gensol.
Okay, so that's the view for Gensol Engineering that we are looking at. But next we have the caller joining us, and this is Dheeraj from Hyderabad. Hi Dheeraj, welcome to this show. How can we help you today?
Hi ma'am, good morning. This is Dheeraj from Hyderabad.
Yeah,
I'm holding 1100 shares of Senco Gold.
And at the price of, if you can give us the price range, and how long have you been holding the stock?
At 367 rupees, ma'am.
Okay.
I have been holding since last 1 month.
Okay, you've been holding this for a month. So you want to understand, is your view for a shorter term or for a longer term that you're looking at?
For a short term, ma'am. For next 4 to 6 months, if I hold the stock, would I be able to make some profits, or should I add more at current levels, or should I exit the stock?
Okay, let me take your query across to Brajesh. Brajesh, your view, he is currently facing a loss of 80,000 on the counter and wants to understand a 4-month picture on this stock, whether he should add more or hold on this.
So, yeah, hi, morning. So specifically from the trading perspective, I think that he can just hold on to the position, and eventually about 300, 310, if it's sustained, then I think he can add up some more little bit of long trades. And eventually I'm saying this because there has been a gap in this, falling gap has been there in this particular stock. So more or less that gap can get filled. Time frame will be a little bit difficult to do the prediction, but then I think somewhere close to 400, that bounce back trade is much more possible. So eventually on the way up, whenever it crosses 300, 310, he can add up a little bit more and it can average it out. And more or less towards his cost is what I can look at as of now. So I think advising to hold the position, and on the way up on a little bit of confirmation, he can add a little bit more.
Right. The next query coming in is from Yashwant from Andhra Pradesh, and he's holding around 150 shares of Mahindra and Mahindra, bought at a price of 2,500. Yashwant, you can go ahead and ask your query.
Yeah.
Right,
Hello?
Yashwant. So, do you want a long-term view or a short-term view when it comes to Mahindra and Mahindra?
Mine a long-term view, nearly about 3 to 5 years.
Right. Brijesh, can you give your long-term view when it comes to M&M?
I think from the long-term perspective, this 2,500 is a very decent support. So we are of the opinion that it can see a very good bounce. On the 4 to 5 years, it's a quite a big time frame. But definitely it can it can easily see 3,500 level plus in the next couple of years. So it's a demand zone. So as long as it is about 2,500, there is no worry to be seen. So it looks good on chart. Long-term perspective will remain positive.
Saurabh, how are the fundamentals looking like for M&M?
If you look at the M&M, they have a great portfolio. I mean, it is the only company which is doing above average than the four-wheeler automobile available in the industry. I mean, their SUVs are in demand. The tractor segment is likely to good. In the Rabi season so far has been good, and there is expectation that there will be a good monsoon this year too. In the commercial vehicle side, also they are doing good. The stock has been re-rated in the last 3-4 years. It is not cheap if you look at the valuation, but considering the fact that the investor has a long-term perspective, like 4 to 5 years, I don't think so. There is any kind of a worry. I think it is a portfolio stock. It should be a hold.
So that's the view for M&M that we are seeing, but shifting focus back to the WhatsApp queries. Next query is from Srujan from Hyderabad. He holds about 5,000 shares of Northern Arc Capital, and this is at an average price of 230. Wants to understand whether he should continue to hold or sell on the counter given his time horizon is for the next 6 to 12 months. Brijesh, I'll come to you on this stock. Now, currently, if you see, he's facing a loss of 3 lakh. It's a substantial number that we are seeing. What is your view on this counter?
Madam, structurally, the stock is making a lower top, low bottom formation. There has been no reversal as of now. So I think it would be a little bit difficult to predict how exactly the things will turn out. But then on the way up, 190, 195 is a resistance zone. So technically, if those levels are taken out, then there can be some confirmation. So as of now, I would ask him to hold the position and then review it a little bit later, whenever there is a small bounce.
Right. The next caller query is coming in from Murli from Bangalore, and it's on Dixon Tech. Murli, you can go ahead and ask your query.
Good morning, sir, and thank you for taking up my query. I bought Dixon Technologies about a week back at 60 shares at 14,147, hoping that the summer is expected to be very, very hot, and all AC companies will be doing well. Can I hold the shares from a point of view of, say, 1 year? Or alternatively, can I switch to Blue Star?
Right. Saurabh, any views on whether he should continue to hold Dixon Tech or move to Blue Star?
If you look at the Dixon Technology, there is no issue with the order book they have. They are consistently growing, while the growth rate is also tapering off. If you look at the profitability, the company is making just 2% on the PAT side of the total revenue that they are making. So in terms of valuation, it is trading still. I feel it is valued highly. I mean, 36 times to price to book value, more than 100 times to multiple. He has also asked about the Blue Star. I think if you look at the Blue Star, it is a much stronger company. Yes, the summers this season are going to be much hotter than the last year, and all the air conditioned players are likely to go first. And moreover, Blue Star is also on the commercial side, and the business is really doing good. Out of the two, I would prefer Blue Star. I think he should go with the Blue Star.
Okay, so Blue Star a clear pick as against Dixon Tech is what we are seeing. But next we have a caller joining us, and this is Paramjeet from Himachal Pradesh. Hi Paramjeet.
Hello ma'am, good morning.
Good morning. Please state your query.
I am having 6,000 shares of DAM Capital at the rate of 202.
Okay.
I want to know long-term as well as short-term view.
Okay, so you want both the views, and I understand that this is the price of IPO that you received, this subscription?
No, bought recently.
Okay. So can you just say when was the time that you bought DAM Capital?
Sorry ma'am, pardon?
How long ago did you purchase the stock?
Only a few days back.
Okay, only a few days back. Okay, let me take it across to Saurabh first. Your view on DAM Capital?
On the valuation front, I think it is expensive. It is a very small company trading at, I mean, in the valuation terms, it is richly valued compared to its peers also. With the the kind of market activity which is happening, I think the volumes are drying down. Even on the exchange, if you look, the volumes are drying down. And the brokers are also experiencing the same pain. I don't think so. Going this quarter or maybe going forward, the earnings will be earning will see growth, that the kind of growth they have seen in the past. So in my sense, I think he has bought at around 200. As the stock is trading at 220, I think he should book profits and stay away at least for the short term.
Rajesh, your view as well. I understand that it's a recent listing, so the the viewpoint or the information point in terms of charts would be limited. But just want to get a sense on this company.
Yeah, so I think it looks like it has been correcting a lot, and in the recently it has taken support, and we have seen some good amount of bounce. So this bounce can continue to the level of another 20 points. Till to 240 is what I can see. That continuation of the trend can be there. The bounce can be seen. So even I am of the opinion that closer to 235, 240, 250, sorry, 240, he should be looking to book profits and stay away.
Right. The next query is coming in from John from Mumbai. He has close to 772 shares of Bank of India, bought at a price of 107 rupees per share, and he's saying that he can continue to hold this counter for the next 2 years. Saurabh, any view when it comes to Bank of India? Should he continue to hold this counter or exit?
I think if you look at the PSU Bank, it is relatively well priced. I mean, on the valuation fronts, I think all the PSU bank stocks can be basketed into the value stocks. If you look at the Bank of India, the numbers are good. In the last quarterly earnings, we have seen that there was a decent amount of growth, and with the cleaner balance sheet, low NPA, and the margins less than net interest margin less than 3, I think it is quite a good pick. For the next 2-3 years, I would suggest a hold.
Okay, suggesting a hold on Bank of India. That's the view on the fundamental side. But next we have a caller joining us, and this is Kamath from Bengaluru. Hi Kamath, how can we help you on the show today?
Madam, good morning. I have 1,000 sequence scientific at the rate of 160 rupees.
Right.
So I just wanted to know whether I can add at this price and average it.
And you want to understand whether you should add or average it out. Okay, so let me take this. And what's your horizon period, if I can know more about this as well?
Maybe 1 to 2 years.
Okay, 1 to 2 years. So let me go across to Saurabh. Saurabh, what's your view on this counter?
Not in coverage, won't be able to comment.
Okay, so let me take it to Brijesh. Brijesh, your view on Sequence Scientific?
Yeah, so this counter is slightly seeing some reversal. So 160 is the trigger price, whereas the 250-day moving average is placed. So I think once it crosses 160, there can be some technical reversals can be seen. So on the way of 180, 185 can be seen on the chart. So it's advisable to hold the positions and do more averaging or maybe adding fresh longs above 160 levels.
Right. The next caller query is coming in from Sumit Sharma from Delhi. Sumit, you can go ahead and ask your query.
Hi, this is thank you for giving me the opportunity. So I have one question. I am holding Raymond shares, approximately 300 shares, from the rate at the average rate is 1846, and I'm having approximately 2 lakhs of negative losses in this.
Right, and I assume you want to hold this share for long term, and that's what you want to know, whether you should hold this counter
I can hold it for longer period, yes. Right. I just want to know whether it's to hold or accumulate more on at this price.
Right. So Saurabh, coming to you, do you advise Sumit to continue to hold Raymond shares, or should he buy more to average the counter at this price, or should he completely exit?
The stock has already corrected a lot, and I would if you look at the valuations now, I don't think so. here one should sell. But at the same time, I think the company has two business. One knows that the Raymond is all about the clothing, and the wedding season have just passed. I think the number this quarter would be good. With respect to the residential business in which company is operating in, I think the best of the real estate cycle, in my opinion, has peaked, and the growth is also in terms of volumes, sales is tapering off. So all the real estate players are experiencing the same. With respect to the whether it is good to hold, I would suggest a hold for the next 2-3 years, but don't average it.
Okay, so that's the view for Raymond that we are seeing. Next query is from Ranjan Karke. Ranjan from Bangalore, and he holds about 720 shares of Geo Financial, and this is at an average price of 350 that we are looking. So currently facing a loss of around 92,000 on the counter, wants to understand whether he should accumulate more now or average the price further. So let me take it across to Brijesh. Brijesh, your view on Geo Financial?
Yeah, but we are not too much keen on the Geo Financials, so we are not recommending any fresh longs. So since he's already taken a position, he can keep the positions long with the last week low as the stoppers, which comes at the 198 level. So with that base, he can hold the trade, and closer to 250 levels, I think he need to review it, and maybe possibly if he needs to exit, he can make an exit.
Right. The next caller query is coming in from Sudhakar, Hyderabad. Hi, Sudhakar. Thank you for calling us. You can go ahead and ask your query.
Good morning, sir.
Good morning.
Hello.
Good morning, Sudhakar. You can go ahead.
Yeah, I wanted to ask regarding Anantaraj, sir. I am holding at 796, sir. 79 shares.
Right. And you want to hold these shares for long term or short term?
Actually, sir, I had an intention of holding it long term, but what happened after DeepSeek, suddenly it had dropped, actually.
Right, sir.
I don't know what is the relation between DeepSeek and Anantaraj. I'm really surprised. I was very comfortable with that, actually.
Right.
Anantaraj, but suddenly it has dropped, sir, actually, after DeepSeek.
Right.
Now I am on loss, whether should I hold it or not, because I am around 39 to 40% loss.
Right. So Saurabh, coming to you, I believe that the fall after DeepSeek was because DeepSeek warranted the fact that the requirement of data centers would be less, and given the fact that Anantaraj has some exposure to data center business, the fall might have been triggered by that. Saurabh, what's your view when it comes to Anantaraj here?
Even after the fall, I think data center does infuse the huge rally in the stock price. I think after the recent correction also, stock is decently priced at about 4 times to book value, 44 times trailing earnings. There is expectation that after this DeepSeek and what is happening in the AI arena, that the margins which markets were perceiving will not be there. So in my opinion, I think the stock is still richly priced, and and in terms of valuation, and the market is quite apprehensive on the margin outlook going forward. So I would suggest better to get out in case you find any rally in the market.
So not a positive view that we are looking in terms of Anantaraj, but let's shift focus to the consumption space. And the next query is from Ajit. In fact, let's talk about two stocks which are in focus. One is Titan and Kalyan Jewellers alongside with it. So Ajit wants to know whether he should hold Titan shares. He's holding Titan shares at a price of 2,900, and he holds about 25 shares in the counter. Wants to understand whether he should book profits or wait for a dip on this. Alongside, we also have another query. This is Arjun, and he has bought about 50 shares of Kalyan Jewellers at a price of 542. Wants to understand the long-term picture on this. So, Saurabh, let me come to you on both of these counters. Your view, if you prefer Titan more to a Kalyan Jewellers, and what is your take on the overall space?
If you look what is happening in the gold prices have seen a phenomenal up move. This year also the gold has seen a good amount of up move, which is led to buyers waiting on the sidelines. The sales outlook is for all the jewelers. I think the sales is plummeting. I mean the kind of growth but they used to see is not happening, and it does not likely to happen because of the US stamp tariff safe haven buying is still continuing. And now a lot of competition has also come up during this season, this quarter also. A lot of jewelers are coming up with steep discount to push up the sales. So in terms of margins also, there is likely to be a good amount of pressure. So I would suggest better be sidelines from investing in the jewelry stocks. With respect to the Titan, I would suggest him to book some small profits. With respect to Kalyan Jewelers, I'll suggest better take money off the table in case you find any value.
Okay, so that's the overall take that we are seeing in terms of the consumption space. But it's time to slip into a short break. But before that, Brijesh, thank you so much for joining and solving all those queries. But more stock queries on the other side, so do stay tuned in.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction.
Welcome back. You're watching Ask Profit on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, before getting into the next query, let's welcome in our technical guest Ajit Mishra from Religare. And Ajit, coming to you directly, firstly on this question, it's from Gul, one of our regular viewers of the show. They want to know whether to buy Coal India or not for the next 6 months to 1 year time period. He wants to know what would be the right price, entry price for Coal India. Any views on the technical charts?
Yeah, good morning, Sumit. So, see, most of the PSUs named, we have seen decent correction in the last 4-5 months, including Coal India. Means the stock was quoting around 525 in good times, around the record high area. And we have now, from the last couple of months, hovering in this band 350 to 380. So it seems like a short-term bottom for the stock, which could propel, further recovery towards 420, 425. So roughly around 8 to 10% is something that definitely one can vouch for from the current levels. So if you're okay with that, definitely you can go ahead and start accumulating at current levels with 360 as a closing stop loss.
Okay, so that's the view for Coal India that we are seeing. But before we move to the next query, you can call us and ask your queries on the numbers flashing below on your screen. But with that, let's take the next query which we have, and this is Vino from Kochi, and he wants to understand the view on Zomato. He holds about 500 shares of Zomato, and this is at a price of 270. Wants to understand whether he should continue holding this for a longer period. This time horizon is for up to 3 years and more. So Saurabh, let me come to you for Zomato. Now we've seen a correction in not just Zomato but on Swiggy as well. Want to understand your take overall for a longer term picture. Are you still bullish on this counter?
I think a lot of competition is happening in the segment in which company is operating called Blinkit. Blinkit having some competition with the Flipkart Minutes, Zapto, with the Amazon coming in. I think what market was perceiving is that there is going to be likely a good amount of profitability going in the next few quarters. But I think it is still away, and that is why this correction is happening. I would suggest avoid on it.
Right. The next query is coming in from Babu Varghese from Thrissur, Kerala. He owns around 100 shares of Shriram Finance. He hasn't mentioned at what price he has bought these shares, but he's saying that he's a long-term investor and he wants to know whether should he continue to hold this counter or switch to some other name. Actually, in fact, he has just edited his message. He's saying that he has bought Shriram Finance at a price of 614. Saurabh, coming to you, what would be your view when it comes to Shriram Finance? Should he continue to hold this counter or switch to some other NBFC name?
I think it is a very good company. If you look at the balance sheet, it is quite clean. The NPAs are within limits. I mean, if you compare with the other NBFCs, if you have a long-term perspective, I think you can hold it.
Okay, so that's the view for Shriram Finance that we are looking at. But next query is from Sankar from Chittor, Andhra Pradesh, and wants to understand the view on red tape. Now, he does not have a reasoning behind the fundamentals and the technicals, but recalls the stock on the basis of its brand value. Currently, if we see, red tape is down about 3% in trade today. But, let me understand from Saurabh on a 4 to 5 year perspective, what's your outlook on this counter?
I think in the footwear segment, what we like is a company called Metro Shoes. I mean, in the red tape segment, the average price per piece is quite less, and there is a very good the demand is lower in the lower and middle class segment. I think in the premium segment, companies like Metro brand is likely to do good. For the next 4 or 5 years, I would suggest a buy on Metro.
Right. The next query is coming from Pradeep Paul from Vijayawada. He wants to know whether PB Fintech, that counter looks good on charts and should he buy at current levels. Ajit, any views on PB Fintech?
So Samit, after this correction from 2200 to 1400 mark, we are seeing a bit of a pause, but it's too early to say that we are set for the reversal. So as of now, it seems like again a rebound trade in case if he's planning any with the 1350 as a stop loss in the first area of resistance. The short-term moving average placed around 1510 to 1520 would be his target zone. So the risk to reward is 1:1.5. So if he is okay with that, definitely he can go ahead.
Okay, 1510 to 1520 is the targets that we can look forward to PB Fintech. But next we have a caller joining us, and this is Rajiv from Noida. Hi Rajiv, how can we help you on the show today?
Yeah, hi. So I just wanted to know, I just wanted to invest some money in the stock market right now. So I'm looking for the two stocks like like Bajaj Finance or L&T. So which one should I go for, like in short term?
Rajiv, any particular reason that you're bullish on these two counters only in the large cap space?
No, I just anyone suggestion if you can give good stock which we can buy.
Okay, let me take this across to Saurabh. Saurabh, what's your view on both these counters, whether you prefer a L&T over a Bajaj Finance, both in completely different sectors, or any other counters in this space that you are optimistic on?
See, both companies are good, but out of the two, I would suggest to go with the L&T. I think the capital goods space, I think industry is likely to do well. The company has a good order book, and they have guided for they have retained the margin guidance also. Going next year, I think the government capex and the private capex is likely to do well. To go well, and which will help L&T to grow its business and the order book. The other stock which he can buy is maybe he can go in the banking space for the ICICI Bank. In the utility space, we like NTPC, and maybe he can go with the Reliance for the next 4 or 5 years.
Right. The next query is coming in from Pankaj Pitroda. He wants to know whether is it a good time to invest in Ola Electric, or should you wait for much more correction when it comes to Ola? Saurabh, coming to you first on Ola, any views? Is it a good time to enter the stock, or there could be more correction here?
I think they are all negatives with respect to the Ola Electric. Today also I have heard some statements on your channel that some raids are going on. I think a lot of exits were there. A lot of customer grievances were also there. The stock has derated in the last few months. I would suggest a sell on Ola.
And Ajit, what would be your technical view when it comes to Ola Electric?
So Sumit, we are at record lows, and on every uptick we are seeing that the stock is facing pressure. So as of now, there is no sign of reversal in the short term as well. So one should avoid.
Avoid on Ola Electric as per the technical view is what we are seeing. Next, we have Suresh joining us from Hyderabad. Hi Suresh, morning.
Yeah, hi.
Yes, please state your query.
I am holding Suzlon 1000 shares at 52.
Right.
So I'm having a long-term outlook in next 1 to 2 years. Can I add more now? 1,000 more? Can I add it now for target of 80 rupees in the next 2 years?
Okay, and how long have you been holding on to this counter?
Recently, I bought it at 52 and it's bounced back from lower levels around 48. So I entered it into 52 just a week back.
Okay, right. Saurabh, your view on Suzlon Energy. Now, this is one counter that, there's a lot of investor interest in terms of whether retail spaces. Want to get your perspective.
our view is quite constructive on the utility segment. I think Suzlon has seen a good amount of turnaround in the last 2-3 years. The company has now good order book with the debt positioning, debt coming off from the balance sheet. I think for the next 4-5 years, it makes sense to hold Suzlon. And in fact, if you look at the wind business, I think it is more profitable than the solar one. So then the return ratios are quite higher in this case. So I'll suggest to, yes, he can buy more in a staggered manner and can wait for next 2-3 years.
Right, buy more and continue to hold Suzlon is the view coming in from Saurabh. The next query is from Qadir Sheikh. He has around 300 shares of V-Guard Industries bought at a price of 180 rupees per share. He's currently sitting on a handsome gains and he wants to know whether should he continue to hold this counter for long term. Saurabh, any views on V-Guard Industries?
I think it is a very good company. It's largely into the water heater space and the lot of consumer durable items. I mean, the company is doing good, and largely it is a player which has more business in the south. I'll suggest a hold.
So hold is what we are seeing for V-Guard Industries. But now moving to the next query, this is in the real estate space that we are seeing the next query. This is from Madhu from Bangalore, and she holds about 150 shares of Sobha, and this is at a price of 1,336. Currently, what we've seen in the real estate space is a lot of correction. She's facing a loss of 17,000 and wants to understand whether she should continue to hold or sell on this. So let me come across to Ajit for this one. Ajit, what's your view in the overall real estate space? Are you also bearish on this counter? What's your view on a Sobha Limited?
Right. So actually, we have seen in line with the other sectors, the realty index, the stocks, they have also fallen sharply in the recent months. And now at least we have started seeing some sign of exhaustions when it comes to the sellers. Means we are not seeing any fresh lows in most of the names. In fact, some of the names, they have rebounded swiftly. Shobha, we are seeing currently some base formation going on for almost 1.5 months. In fact, it made an attempt of recovery towards the medium to moving averages around 14 mark, but it couldn't sustain. So as of now, I would definitely recommend her to stay put with 1100 being the fresh base for this, and 1450, 1500, that would be the probable target in the next 1 to 2 months.
Right. Well, the next caller query is from Akhil from Pune. Akhil, you can go ahead and ask your query.
Sir, I have 50 shares of Olectra Green Tech. I brought it at an average of 1,555.
Right.
Now I'm at a loss. Should I hold or sell for the long term, at least for 3 years?
Right. So if you want to hold, you can hold for 3 years. Is that what you're saying?
Yes, sir. I can hold. If it gives me a profit, I can hold for 3 years. Or if I should sell, at least loss book, and I should get out of the stock or what.
Right. Saurabh, coming to you, would you advise him to continue to hold Olectra Green Tech at the current levels, or would you advise him to exit this counter?
Yeah, on the valuation front, even after the correction, it is still trading at on the higher side, more than 9 times to book value and maybe 30-40 times to trailing earnings. They have a good order book, but we have to yet to see the execution and the profit margin guidance. I think he should wait for a quarter or two, see how the things are shaping up, and then take a call. I would not suggest to average more. I think the next is, I think he should look for the management guidance and then take a call.
Okay, so that's the view for Olectra Green that we are seeing. Next query is from Lavanya from Tamil Nadu, and she is quite optimistic on the pharma space as what she wants to understand, and this is for a long-term outlook. So Saurabh wants to understand in the pharma space any counters that she can check out or view, and which are the counters that you're bullish on.
I think it is very tough to take a call as on the pharma because no one knows what kind of levies would be put by the US administration on the Indian pharmaceutical and what are the outcomes of them. I think some of the industry veterans have said that maybe if some kind of duty would be imposed, then it would they would able to pass on. But I think it will be a tough call to say what is likely to happen. But few of the pharma companies that we like, maybe Natco Pharma and the DVs he can go for.
Right. The next query is coming in from Jashwant from Bangalore, and he seems to be an intraday trader. So Ajit, coming to you, any views on IRFC? How's the stock looking like on technical charts?
So Sumit, after this recent rebound, we are seeing that the stock is struggling to hold above its short-term averages. So if the view is very short-term, I would recommend him to avoid any fresh position until the stock sustains above 125 mark. And for the existing trade also, I feel that after this rebound, there is a possibility that the stock might again witness some consolidation before the next leg of the up move. So in both the cases, avoid fresh buy, and for existing position, 118 should be a stop loss. On higher side, 130 will be the first area of resistance. So that should be his target area.
Okay, so that's a view for IRFC. But Ajit, I'll stay with you for the next query as well. And this is from Ekambara from Hyderabad, holding 20 shares of GE Shipping, and this is at a price of 1,320. Wants to understand whether it's the correct time to average this, because in the last 2-3 sessions, we've seen that the stock is looking upwards from the support zone. Do you also have a similar view on this counter?
So yes, we have seen decent recovery in the passing week, and there's a possibility that this recovery may further strengthen. But as of now, I wouldn't recommend adding to your loss-making position. See, mid cap and small cap, we are still not very confident about that, whether these kind of recovery attempts will sustain or we are going to see the reversal. So comparatively, larger mid caps and large cap is something that one should be focusing on. And for the existing position in the broader markets, one should keep on trailing their stop losses on rise. So for GE Shipping now, 850 should be a stop loss, and 1,000, 1,025 you should review again.
Query is actually an international query coming in from Nagendra from Tokyo, Japan. He has around 5 lakh rupees to invest into in the Indian markets, and Saurabh, he wants to know one stock each from mid cap and the small cap space that would be a top picker as per you.
Very tough to give a call, but yes, we have been our view is quite constructive on the capital goods and the power generation segment. In that context, I would suggest companies like KEC Transmission, which lies in the mid cap and small cap space, and the other company which we would like to suggest is maybe Sectoral Jal Vikas Nigam, because we have a quite constructive view on the utilities.
Okay, so KEC International, and another stock is SJVN, which is in focus right now. But you know what? The next, we have a caller joining us, and this is Kalpa Ranjan from Guwahati. Hi, Kalpa. Welcome to the show. Please state your query.
Yeah, good morning, madam. I'm Kalpa from Guwahati, Assam. I have brought Tata Power shares of 250 shares at 380.
Right.
I want to buy right now. So is the right time to enter the market, right, madam?
Kalpa, any particularly reason that you plan to add more to this position? Are you looking for a longer term outlook on the stock?
Yeah, I'm looking for longer term, 3 to 4 years.
3 to 4 years. Okay, Saurabh, let me come to you on this one. What's your view on Tata Power?
The view is positive on the Tata Power, but rather than buying more Tata Power, I would suggest him to buy companies like maybe SJVN and NTPC and build a portfolio in the utilities.
Well, the next query is coming in from Satya from Hyderabad. He has around 25 shares of Adani Enterprises bought at a price of 2,430. He wants to know whether should he continue to average this counter at lower levels or continue to hold the quantity it has currently has around 25 shares or exit. Saurabh, any views on this?
I would suggest avoid to average mode.
Right.
Okay, so that's the view for Adani Enterprises that you're seeing. But a quick disclaimer that the channel that you're watching is a part of the Adani Group. So NDTV is a subsidiary of AMG Media Networks. Again, moving on, next query is from Padmandan, and he wants to understand Kane's technology view, whether the share will regain its value. Ajit, I'll come to you. What's your view on Kane's tech?
So actually, it's a very sharp cut the stock has experienced in the last 2-3 months, and now we are seeing some sort of base formation around the medium-term moving averages on the weekly charts. So as of now, indications are mixed because the volumes are dry and we are not seeing any decisive move either. So in the near future, this consolidation might continue. So if the view is, let's say, for 1 to 2 months, this consolidation might continue to extend. So one should avoid for short-term trades. And if you have made investment in past, 3,500 in the closing, this should be your stop loss. In case of recovery, around 5,500 is something that might act as a strong hurdle in let's say a quarter time. So one should plan their trades accordingly.
Right. The next is a caller query coming in from Ishwar from Bangalore. Thank you, Ishwar, for calling us. Could you go ahead and ask your query on the show?
Yeah, this is Parmeshwar from Bangalore. I'm holding IGI Limited at around 560 rupees, almost 200 shares. So I wanted to know which the holder booked the what I did.
Right.
Because I am looking for 6 months time period of that.
Right, 6 months. So, Ajit, coming to you, any short-term views on IGI? How's the stock looking like?
So Sumit, initially post-listing, we saw that the stock inched higher, but it's been almost 2-3 months now that we are seeing this gradual drift. The stock is trading at the 52-week low, record lows. So as of now, at least I would recommend to reduce its position and wait for some sign of stability and reversal. So as of now, these indications are in the favor that this decline may continue to extend further. So it's prudent to at least book partial profit and wait on the sidelines for fresh entry opportunity.
Okay, so that's a view for IGI Limited that we are seeing. But next, next query is from Lakshmi Kant from Hyderabad, holding about 51 shares of BSE Limited, and this is at a price of 5,093. Currently sitting on a loss of 51,000 on this counter, wants to understand whether she should continue to hold or sell here. Saurabh, let me come to you. The outlook is for a 1-year period. What's your view on BSE?
The volumes for both the exchanges are different. There a lot of competition is coming from the NSE also. In my opinion, I think on the valuation side, the stock is quite expensive, and in my opinion, I think one should avoid investing in the BSE. I think the numbers are likely to. I mean, on the operation side, I think we are likely to see dip going forward.
Okay, so now we are at an interesting part of the show, which is the rapid fire round. So we'll be asking queries and request the guests to, keep their answers pretty short on this one. So the first query is from Dinesh from Gurugram, holds about 250 shares of Ganesh Housing, and this is at a price of 800. Ajit, I'll come to you whether she should hold, add or sell on this counter.
I would recommend to hold with 950 as a stop loss and 1200 as the immediate target.
Right, the next query is from Surendranath Yadav. He's holding Motherson Sumi shares, bought at a price of 127. Saurabh, should he continue to hold or exit?
Exit.
Okay, so the next query is from Vijay, holds Equitas shares 358 units at a price of 90 and wants to understand the long-term 2 to 3 years picture on this. Saurabh, your view?
View negative, better exit.
Right, the next query is from Sarjit Shekhawat from Jaipur, Rajasthan. He wants to know, he holds around 1,000 shares of Ixigo, bought at a price of 172. He wants to average this counter. Saurabh, should he do this and continue to hold for long term?
Hold but avoid average.
Okay, next query is from Tejas from Nagpur, and he holds Tasty Bite shares, bought it at a price of 11,000. 15 shares is what his quantity is. So whether he should average it out, Tasty Bites is the share price that we are seeing. Ajit, I want to come to you on this one.
Avoid averaging, but maintain a stop at 7,500 for the complete position.
Okay.
The next query is from Nanda Kumar, and it's on Power Grid Invit. He has around 95 units, around 2,000 units bought at 95 rupees. He can hold for 5 years. Should he do that, Saurabh?
Continue holding.
Okay, next view is from Madhu from Hyderabad and holds about Bori Renewable Technology, 80 shares at a price of 1,210. Wants to understand a 2 to 3 year outlook on this. Saurabh, your view?
Avoid.
The next query is from a long-term investor whose name is B. Mehta, and he has around 10 shares of Coforge, bought at a price of 4,310. Should he buy more or hold the current number of shares, Saurabh?
Book profits.
Okay, so this brings us to the end of the show. Thank you so much, Ajit and Saurabh, for joining us on the show and solving all the queries, but we have a lot more lined up on the other side. So, but with that, we are short on this segment of Ask Profit. But thank you so much, viewers, for tuning in and asking your queries.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure from
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we're talking about Aptus Value Housing Finance Company, and as the name suggests, it is essentially into housing finance. Well, this is an NBFC. It's a relatively smaller NBFC, at least in terms of market capitalization with respect to several others, but it does seem like it has done its part in terms of growth of late. That said, let's take a look at how things have panned out and what the company in fact does. So, of course, it offers loans for home construction, home purchase, renovations, as well as home extensions, and it's focused on self-employed, low and middle income families, primarily from semi-urban areas and rural areas. And that perhaps at this point in time, it does look like it has its strategy in place, and what kind of markets it wants to target and what kind of clientele it's looking for, what kind of borrowers it is looking to focus and target as well. Now, the average ticket size for this particular company is about 10 lakhs. So the sum itself is also not significantly large, and a lot of the targets here will likely have a ticket size of less than just 10 lakh rupees. But in terms of product mix, how does that pan out? Now, at the end of the third quarter of this financial year, if you consider how things were in terms of your loan, well, 61% of your home loans, rather 61% of your revenues, or rather your loan mix was home loans, and that was followed by another 21%, which is small business loans, and quasi-home loans comprise about 14%. So that's as far as your split's concerned. What geographies are they in? But they are in 6 states currently, in one union territory, and they have a little less than 300 branches. 298 to be precise is where the number of branches is, and it has seen a significant shift in the number of customers it has catered to since FY20. In the last, well, a little less than 5 years, it has seen its customers move from a little less than 44,000 all the way to well over 1,52,000 customers. So, like I said, it has seen a lot of growth, even in terms of your branches, which has gone from 175 back in the end of FY20 all the way to 298 precisely at the end of the 9 months ended, FY25. So this is as far as the company is concerned. We do know that Aptus Value is in a space which is there's a lot of competition here. Now, this is a 15,000 crore market capitalization company. So, and there are plenty out there in terms of competition. It's something that we're going to address as well a little later on in the show. But for now, this is what the company does, and just to give you an idea about how things have panned out. Now, as we always do, we take a look at the fundamentals of all these companies and see how things have, in fact, panned out for the company in terms of your income statement, your balance sheet, your operational metrics, as well as asset quality. These are some of the most important aspects as far as an NBFC is concerned, an NBFC catering to housing finance is concerned. But moving on, we look beyond and we take a look at shareholding as well, valuations, street credentials, as well as street coverage too, to give you a better idea of how the company has done and has panned out. Well, in order to do that, as usual, I am joined by Harsh, who's also going to help us shed more light into what the company has been doing of late. So Harsh, good morning and thanks for joining in. I reckon that income statement, as usual, will be the good place to start off with.
Yeah, absolutely, Agam. Largely when you're looking at the kind of trajectory that the UM has taken, it's roughly a 30% kind of CAGR that they've done over the last 5 years. And I'm just trying to zoom out a little bit here. just for better context. And net interest income growth also equally healthy. We've seen a 28% growth both on NII as well as profit after tax when I'm looking at the 2-year CAGR of this company, or near 3-year CAGR as well. So healthily placed on that count where the growth numbers are concerned. The trajectory looks good. Yeah, I mean, a little bit on the OPEX front, you've seen OPEX grow at around 25% despite top line growing at 30-odd%. And therefore, you're seeing a little bit of OPEX play also starting to play out on that P&L number on the profitability metric. So just those couple of things to be kept in mind. How much will that ramp up happen, etc., will also be interesting to understand. But yeah, that's how it is.
Okay, so well, pretty healthy income statement from what we see and what we can make out. So it's certainly a thumbs up there. I'll quickly take you through the balance sheet, and perhaps Harsh can give us a little bit more color on the balance sheet as well. But, well, they have seen their AUM grow. This is, of course, an expected lines because back in FY22, they had an AUM of around, well, you know, little less than 5,200 crores, has grown to 10,266 crores to be precise right now. In terms of their borrowing as well, well, moving in tandem from 2,700 crores all the way to little less than 6,500 crores. And this particular number is perhaps something what Harsh can shed light on, also give us the full formula. So, yeah, what do you can tell us about this particular ratio?
It's the capital and risk-weighted assets ratio, which generally typically determines how well capitalized the company is. Of course, all NBFCs and banks need to have adequate capitalization, and generally that's between the range of around 15 to 20% and 20 to 25% for certain fast-growing NBFCs. This one is sitting at 65% and therefore very well capitalized, at least in the medium term. It's of course growing at a healthy clip as well, but that capital ratio of 65% just kind of signifies that there is just adequate room available for it to grow.
Right. So no concerns about the fact that it has moved from 81% to 65% because other than that, ratios in general are sub 25%.
That's correct.
Okay. So there you have it, which is why we're giving this the balance sheet a thumbs up as well. But what about the other key operating metrics, Harsh? What can you tell us there?
Well, yeah. So when you're looking at your margin number, again, some of these numbers may well change because it's so well capitalized, and therefore there's so much scope for the borrowing number to go up and interest expense also to go up. If both of those numbers actually go up, you'll see margins come off, and therefore the better way to look at it is spreads. What's happened with spreads? And let's zoom out also a little bit. From 9.2% spreads have come down to 8.7%, but also it's an environment where the borrowing rate has gone up substantially for NBFCs. From FY22, we've seen the repo go up quite sharply, 2% plus, and therefore some of that also reflecting on your spread number. But nonetheless, they've been able to maintain their spreads. Of course, a slight bit of dilution, but they've been able to maintain it. Question is, can they continue to maintain it? And now, with the repo rate cut coming into play, what do you expect in terms of spread? So that's one number I'll be very keen to know. The other piece is with the ROA. The ROA has come off for 9-month FY25, and therefore the ROA trend, how does that go, is something that, again, we would be keen to know. But a near 8% ROA for a company largely lending to the housing or with housing as the collateral doesn't look bad at all, right? Your OPEX to assets also have remained healthy between the 2.5 to 2.7% range. So that's how it's kind of stacking up. You look at borrowing costs going up, that's largely impacting spreads. That's how it is.
Okay, so that's as far as the operating metrics are concerned. Again, this is a tick mark is there as well. We'll talk about asset quality. Now, what's happened here is that there has been a little bit of an up move in terms of your gross NPA ratios. Back in FY22, it stood at around 1.19. It's currently standing at around 1.28. Now, let's not get this wrong. This certainly is an increase. That said, you know, these numbers are relatively lower at this point in time. In general, if you compare it to several of the other NBFCs. So while they may be increasing, the numbers are not terrible. It's the same for the net NPA ratios as well. Back in FY22, that stood at around 0.88, and it's moved up to around 0.96. Do remember that when a company is on a growth path, what usually happens is that as you take on more of the business, oftentimes you do see a little bit of an up move in terms of these numbers as well. It does not mean that the asset quality is at a concern at this point in time because of the absolute numbers are a tad low. But Harsh, you want to come in and add something here?
Yeah, it's interesting, right, Agam, because what you're seeing in terms of that net NPA ratio, and when I'm looking at the 5-year trend, over the last 5 years, this is probably the point where asset quality is sitting at its worst point in the last 5 years.
Yeah.
So whether that's a concern, and why is that so? And the other piece that I'd be worried about, even in terms of asset quality, is 40% of its book comes from a single state, which is Andhra.
Right.
And therefore, that may also be a risk and a concern.
Right.
They're going into Odisha, they're going into Maharashtra. Those are 2 states they are venturing into. But those are also states that they will know less about in terms of customer cohort.
Right.
And I include this as part of asset quality only from a perspective that there could be these emerging risks come up when it comes to your asset quality. Of course, the little bit of slippage that we've seen, or the little bit of slip that we've seen on asset quality, probably sitting at 5-year lows in terms of quality, is the other concern. And hence we give it a neutral, because not entirely comfortable with the way that's gone by.
Fair enough, fair enough. So that's, talking about asset quality. If you, Harsh, want to talk about shareholding as well.
Yes.
An interesting promoter holding here.
Yeah, absolutely. So, so we've got 53% promoter holding currently, but out of that 53%, nearly 29% sits with Westbridge alone. That's of course, it's an LLC. But it will eventually exit at some point. 7% already they've exited in the quarter ended June 2024. After which they've diluted maybe another % or so, but not significantly. So over the last maybe 3 or 4 quarters, if I look at it, the dilution has been roughly 6+%. And that is also reflecting on the number on your screen, the % of dilution over the last quarter or so. But the 6 to 7% otherwise is a large dilution. And Westbridge held around 34.5% in the company at the start of the financial year. And therefore, it's a large chunk in terms of the overall equity of the company. Outside of that, you have, of course, one of the promoters holding around 19%, which is okay. Wouldn't be too worried about that. But moreover, this little bit of overhang, Agam, and we've seen this, it could well be that the overhang goes away.
Yeah.
But it could well be that it remains as well.
Right. No, absolutely. Point taken. And, at the moment, besides, of course, that particular, private equity holding stake, even if you look beyond in terms of FIs and DIIs, for the size at which it is, it has reasonable amount of holding from institutions, which gives you a little bit more of a backup. But that overhang will remain. It remains to be seen as to when Westbridge will look to, shed more weight. And when it does, what kind of institutions will come in and will buy into this particular company. So neutral rating on that one. It will also be a neutral rating on valuations, and I'll take you through that quite quickly as well. If you consider the 1-year forward price to book, and this is as per the Bloomberg consensus, this gives you an price to book of around 3 times. And this is more expensive than Aadhar Housing Finance, which is at around 2.5 times, and PNB Housing, which is at around 1.2 times. It's understandable that I think that the third name out there should be Punjab National, PNB Housing, which comes in at around 1.2 times, which will also need to be corrected. It's understandable that PNB Housing Finance is at around 1.2 times, but Aadhar, which is considered to be a slightly higher growth path can be compared here, not taking anything away from Aptus, because as you can see and as you've already spoken about, it is on a significant growth path to in fact showing a lot in terms of what it has done, which is why I reckon that markets would probably want to ascribe a higher valuation to something like an Aptus or Aadhar Housing. But given the fact that it is the most expensive of these three at the moment right now, well, it's going to be a neutral rating here as well. Street coverage, Harsha, we have plenty out here as well.
Well, yeah, very healthy in terms of street coverage. 16 analysts cover it, and a 30% upside from here that the average analyst estimate seems to suggest, 394 being the target price, all of which indicates a buy on the stock for sure, and therefore a thumbs up on this one very clearly. Three things. One, 16 analysts cover it, 13 have a buy, and 30% average upside.
Okay, and well, I'll also tell you about how the stock has panned out. So firstly, in terms of the listing back in 2021, from those levels, the stock is currently lower. So that's not exactly encouraging. On a 1 month basis, it has come down 5%. Last 6 months, correction has been, again, 5%. And the last 12 months, the stock has, come off by around 11.5%. Look, we must realize and understand that, in tandem with something like a mid-cap or a small-cap index, it has outperformed to a certain extent. But overall, the gains have not been satisfactory. In fact, if you consider the 3-year performance, it has moved up only 21% over the course of the last 3 years. Then this is as the markets moved from strength to strength over the last 3 years. So the share price has not moved significantly. Perhaps this is because of valuations, because we do see that growth pan out for the particular company. So some of these factors are playing in favor of the company, but that the valuations have not, in fact, have provided some sort of a headwind for the share price here. But let's take this conversation forward. We are now in conversation with Balaji P, the Managing Director at Aptus Value Housing Finance. Welcome to the show and thank you for joining in. My first question then comes down to your view and what you anticipate with respect to growth, because we've seen very strong growth over the last 2 to 3 years. Can we expect growth to come through at the same clip, even as you expand to newer geographies here?
Thanks for having me on the show. Good morning, all. Just to talk about the growth, what is happening is, if you look at the overall market opportunity that is available in the affordable housing, one is the mortgage penetration in the country itself is very low at around 11% of the GDP. And also the housing shortage is more acute in the areas where we operate, basically the tier 2, tier 3 and tier 4 locations. So this makes us very confident of having to grow at around 30% for the next 3-4 years. And what is happening is the support that is being given by the government in terms of PMAY and the tax benefits that are available both for the company and also to the customers and the housing loan customers. This makes us really confident that we are having a huge runway for growth. And despite this market size can support more competition as well. Plus the healthy growth for Aptus Housing, which we are projecting around 28 to 30% in the next 3-4 years. So that is what is making us really confident about this. Yeah.
Point taken. So this is Harsh also joining in the conversation. While I take the point that growth is extremely strong, also want to understand context from you. You're growing solidly within 2 key geographies. One is Tamil Nadu, one is Andhra, and maybe not geographies, but states. You plan to grow Odisha, you plan to grow Maharashtra in a bigger fashion now. Moving into a different geography, would that impact your asset quality metrics? And what gives you the confidence, if not, that it will not impact your asset quality?
Sure. Good question, Harsh. See, if you look at it, our strategy for growth is this way. See, I select a particular state and go deep into it. So if you look at it, every 50, 60 kilometers in a particular state, I'll have a branch. So this we have done it in the states of Tamil Nadu and Andhra Pradesh, which is contributing to the growth. We'll be doing this in the states of Telangana and Karnataka as well. And also the same thing will be replicated in Odisha and Maharashtra. See, if you look at the genesis of this company, first, this company has been there for 15 years. First 5 years, we were mostly in Tamil Nadu only. So we ventured into other states of Andhra Pradesh and Telangana, where we were able to get this growth and still maintain the same asset quality. So we are very confident that even in Odisha and Maharashtra, this credit quality will be maintained, because the primary philosophy of this company is a credit driven company rather than a growth driven company. For us, the quality of book is more important than the growth. So with the result, we are very confident that we'll be able to do the same thing. We have replicated from Tamil Nadu to Andhra Pradesh, Telangana and Karnataka, and we'll be replicating this in the new states of Odisha and Maharashtra also.
So Balaji, when it comes to quality, as you mentioned that there's going to be of prime importance, considering we are looking at a slight edging up in terms of your net and gross NPA ratios, do you think that we're likely to see a stability around here, or do you think that as business grows, we could see a little bit more of an inch up in these numbers as well?
It might not be so. If you look at it, we closed last financial year with a GNPA of 1.07%, and this has increased to 1.28% as of December. But December quarter was slightly affected because what happened was some cyclical factors affected the industry. In the southern part, normally in November, the floods come in. And in October, there were some holidays which was bunched up because of the festivities. So that had slight impact on the collection efficiency. But we are seeing great traction in this quarter. With the result, there will be a good improvement in the asset quality and also the GNPA, which might be lesser than what we reported in December. So we are not seeing that kind of a problem in any of the states in terms of asset quality.
Okay. Sir, the other key overhang, and I know maybe you're not completely in control of this one, but I'm sure you're having conversations with Westbridge. They've diluted around 7% in this financial year. And to that extent, it will continue to be one of the overhangs on the stock price. And that's clearly reflecting as well. Is it one, a concern for you as management as to who comes in as the other shareholder, because it's a substantial chunk? And second, is there any visibility of how quickly they leave and how quickly they exit? Is there any visibility of that?
Right now, if you look at Westbridge's investment, they came into the company as a private equity investor sometime in 2014. And they have been supporting this company till the IPO time, where they were holding almost 47-48%, and at the time of IPO they sold around 10%. And as you rightly told in your commentary, around May, June of this financial year, they sold around 6-7%. So after that, Westbridge, I don't have any information on what is their plan or when they are going to sell. And if they sell, to whom they will be selling. So as of now, I don't have that information. And definitely, as you rightly told, this would have played as an overhang, but I'm not able to. I don't think I can control it sitting in the company.
Okay, understood. So what about sustainability with regard to both spreads as well as how do you see margins evolve? Because you'll take on more debt as you go by, you're very well capitalized. And therefore, what do you give as guidance for both margins? How do you view it? And spreads, are they sustainable at this kind of near 9% kind of level?
Definitely, we feel that we'll be able to do this, because if you look at our yields, our consolidated yield is around 17.37%. This is not because we are charging high rates of interest. It is basically the product mix. On a consolidated basis, we have around 62% as housing loans. The other thing being the non-housing loans. Again, that is getting classified into some of quasi-home loans, and the other one is the small business loans. And because of this product mix and the interest rates we charge, it is at around 17.37, and our cost of funds is at 8.68. deficit as of now. So that is resulting in an 8.7% spread. Going forward, if you look at my total borrowings, around 53% of my borrowings is variable. And of that 53%, 23% is linked to external benchmark rates. So obviously this 0.25% of that 23% rate of interest that can come down maybe by 0.05% immediately. And also for the MCLR linked borrowings, it might take another 6 months to come to get this rate cut benefit. So with the result, the spreads are likely to widen and it is likely to increase. And if you look at but what will happen is, as you rightly told, there will be no equity infusion into the company, and all the growth which we are projecting is going to be funded out of borrowings. So with the result, the leverage will go up. Because of that, the absolute cost of the interest cost will go up. Actually, the debit in the P&L will go up. So to that extent, the ROA, which is at around 7.7% as of now, another 2 years down the line, it can come to around 6.8 or so. But ROE, which is at around 18.5 as of now, will go up beyond 20%. So this is the plan with which we'll be doing. Yeah.
Right. Right. Well, Balaji, we leave it at that. Thank you so much for joining us and taking us through your views on, the business that we can expect to come through over the course of the next few years. We wish you the best.
Thank you. Thank you, Harsh.
Well, there you have it. Well, before we conclude, a very quick look at the overall ratings that we have given the company at the moment based on its fundamentals. So it's very strong income statement, balance sheet and operational metrics. Moving on to the next set. Overall, not a lot to complain about, which is why we give you a total rating of around 5.5 out of 8. Well, on that note, we're completely out of time on this edition of KYC. Stay tuned in and we will be back in just a bit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various policies.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs.
Hello and welcome. Good afternoon. This is Markets at 12 and I'm Malika Mishra. Let's take a look at how the markets are faring first. Now, after the market snapped a 3-week-long losing streak on Friday, which is March 8th, they opened flat today and continue to hover slightly up in the green. Now, while Nifty is around 22,600 at the moment, you would see Sensex is trading around 74,600 levels, so not doing pretty bad as well. Let's zoom in and check how the broader markets are faring at the moment. Nifty mid-cap 150 is flat but trading with a negative bias. Nifty small-cap 250 is down about 0.4 to 5%, so the broader market is clearly at the moment in a bit of pain more than the benchmarks comparatively. Let's turn to see what's adding some pressure to the Nifty basket. You would see stocks like, although there's more green than red, but you'd see stocks like L&T, Trent, RIL, Indocent and ONGC, dragging down the market and, darkening that red. However, and Indocent clearly is reacting to the CEO's one-year extension. On the other hand, you would see stocks like Infosys, HUL, Power Grid, Bajaj Finance are pulling up the index, and Infosys in the green after CLSA upgrades the stock to outperform. Now let's take a look at the sectoral picture to get a sense of which sectors are performing and which sectors are not as much. More than greens for sure again, but more greens for sure. But metals, FMCG and media are leading the pack, while PSU, oil and gas and auto, they're trading with a negative bias at the moment. Lastly, let's get a sense of the broader market breadth. And you'd see that it stands skewed in favor of the declines with lesser stocks advancing. And I have my colleague Mika also joining us. Mika, what else is moving in the markets today?
I would like to pull up a Nifty small cap 250, which is the clear underperformer in today's day of trade, seeing cuts of almost 0.8%. If you look, get a closer look on the small cap 250, you have 183 small cap counters declining versus 60 advancing. Some of the counters that are under pressure is the 361. It's seeing, cuts of 8%. Something like a JM Financial as well as Triveni Turbine and Anand Rathi all seeing cuts of 5 to 6%. This is followed by something like a Sterling and Wilson or a TVS Supply Chain. On the other hand, something that is doing pretty, well on the small cap, we could just, if you could just pull up something like, if you could just get the small cap 250 counters in terms of, what's gaining and contributing, we could just put that picture in. But even the mid cap, it is under pressure. But something I want to focus on is the Nifty metal. Right. Now, we've seen, steel counters, have a positive reaction. We covered the story in the morning, something like a JSPL or JSW Steel gaining in trade, and this was on the back of some domestic price hikes. And not to forget, the Nifty Metal Index was one of the strongest sectors today as well as last week. But to talk about more, there's a lot we can decode around here: domestic prices, potential safeguard duties, as well as just the commodity picture in general. We have Aditya Velakar, Senior Research Analyst of Metals at Axis Securities, joining us. Welcome to the show, Aditya. Let me start off with our current, our recent dealer checks suggested a price hike just recently over the weekend. And this is the second price hike that we have seen in about a month. Our dealer checks indicated 2,000 rupees per ton price hike, the earlier price hike at 1,000 rupees per ton. What are you picking up?
Yeah, so as you have indicated, the mills have taken price hikes. So it is based on a few factors. So number one is there is a speculation or buzz that the safeguard duty could come in. So that is one. Then the data from China, which has come last week, especially on the GDP growth of 5%, fiscal deficit of 4%. All this positive data has boosted the sentiments of the metal sector. And then there are some decline in the steel imports in the month of February. This might be due to the ongoing investigation from the DGTR. So all these data points pointed towards a building up of positive sentiments. Also, this Q4 is a seasonally strong quarter for metal sector per se and steel sector. So the mills have taken an opportune time to hike their prices.
But let me put it this way: in a scenario where we have hiked our domestic prices, but we still we're still being hurt by the cheap imports. How does that bode well for the company? I get that realizations, get an uptick. But in a scenario where the pressure from imports is still something that is being talked about, how does that picture play out?
So currently, the domestic steel prices are trading at a 2 to 3% discount to import parity prices, and the steel coming out of China for January, February this calendar year is still at a higher level, and that is almost, I guess, 17 million tons, which is up from 15.9 million tons over the same period last year. So the Chinese steel exports are not coming down. So that is one area of concern. But as I said, the imports in India has come down in the month of February because of this safeguard duty investigation. But yes, you are right. The broad level concern still remains for the sector in general, because the domestic demand in China is something which needs to be monitored, and which is something which is quite weak, and that has been an issue since last many quarters. And we have seen that the Chinese steel exports in the calendar year 24 have increased by 20%, almost to 110 million ton, which indicates the ongoing issues in China with respect to their property sector and all. Also, the recent CPI data from China is still negative, which also raises some bit of concern. That's on the flip side. On the positive side, there are indications from the Chinese media that they may cut the steel production for this calendar year by 50 million tons. Secondly, as we discussed, the imposition of the safeguard duty. So if that comes in, then the steel mills will have some buffer to raise prices. Some of the mills have already gone ahead and raised prices. But if that happens, then your import parity window opens up, and that gives us opportunity for steel mills to raise the prices. So just to give an example for Tata Steel, if the prices increases by rupees 1,000 per ton for HRC, then the EBITDA increases by almost 4%. So that is the scenario which we have to work with. So almost right now it is a speculation when the safeguard duties will kick in, but that will be one positive trigger for the sector per se.
Got it. I know, like, when we spoke to, managements of different companies, they expected in Feb. Now we don't know when that's coming in. But another part of this, while these safeguard duties will be imposed with China and Vietnam, you have South Korea and Japan that still account for around 50 to 59% of our import mix. And with the US tariffs being imposed on them, while there's no direct impact on India because our exports are immaterial to the US, but could you see a redirection of these steel imports from Japan and South Korea to India, adding a pressure, from another end?
That probability could be there. The import, the safeguard duty imposition, whether it is from restricted to China or Vietnam, or it will be for all importing countries, that is what we have to see. And as far as the tariffs from US are concerned, that is definitely, it does not impact both China and India directly, because even Chinese steel exports to US in crude steel terms is not very significant. But at the same time, the steel containing material from China to US, that is a significant chunk. And if these tariffs continues, then that basically disrupts the supply chain and redirects the material flow to the ex-US market, which could be disruptive. So the space is in a flux, and we need to continuously monitor the data emerging out of the export market, the ex-US market. Also, there are ongoing investigations in Europe also for potential dumping. So that is also keeping the export market quite competitive. So Indian steel mills are staying away from the European steel market. So a lot of news flows are happening, and this trading window which have opened up recently was because of the positive news from China, as I just said, the fiscal deficit data and all that stuff. And the valuations were not very demanding. So that along with the speculation that this safeguard duty will come, so all these points led to the rally in the steel stocks. But the sustainability of that rally will hinge upon first the imposition of the safeguard duty, and then the continuous data coming out from China, whether the exports drop from the China. So that is, we will have to monitor.
Short on time, I have, last question I'll put in two thoughts. One, what's your outlook on the base metal price movement and how that's seeing an uptick, especially aluminium up 5% in the past month? And if you could quickly give your top picks in the whole metal counters, whether that's ferrous or non-ferrous.
So coming to the second part of your question, our top picks are Hindalco. Then we like Tata Steel in our metal pack. We also like Nalco and Vedanta. So that is the pecking order. JSPL also looks good at these levels. So and then on the base metals, aluminium prices have withstood strong despite the dollar index moving up. Now the dollar index have cooled down, but still aluminium prices have stood firm, and we are constructive on aluminium prices basically because the demand supply scenario for aluminium is much better as compared to ferrous and steel, because the demand from renewable electric vehicles and all that stuff, that will keep driving aluminium prices, that will keep supporting aluminium prices. Also, the supply is something which is not really picking up. So the supply demand scenario fundamentally for aluminium looks fairly stable, and that is the reason we are constructive on aluminium prices, and that is why it is reflected in the prices as well.
Okay, thank you so much, Aditya, for joining us and giving us that picture on the metal space. And definitely, as you said, that the metal space seems to be in a flux, but we will have to keep monitoring to sort of see a clearer path for this sector in the future. And thanks, Mika, for joining us. Let's now shift our focus to a story that will be closely watched by NDTV Profit throughout the day. Gensol Engineering is a stock that has been in focus last week on the back of sharp correction. In fact, the stock has shed almost 40% in the last 5 days. And this comes due to the ongoing debt crisis that has put pressure on the promoters who have recently pledged their shares, putting further downward pressure on